That's from the Financial Times. Mikhail, nothing's going on with Pitzpatrick. What do you want to know? We've still got the daily updates on Telegram. Are you on it? You should get the daily updates. We're on version 4 of the indicator. The most powerful action an investor can take is nothing. If you've got good quality companies, then you want to sit back. If you're with these fund managers, you better do something, because they're going to depreciate your wealth. Why? Because the fund management industry is built upon having the most amount of assets, because they get fees based on the amount of assets that you own. So if they've got more assets, they get more fees. If they've got more assets, they've got to divide those funds into UK, Southeast Asia, whatever, which means they're picking from a very small gene pool. We pick from a gene pool like Warren Buffett of all 10,000 equities. They pick from just the UK ones. They're picking from 100 companies. Well, who do you think is going to win? Somebody who filters down from 10,000 to the best 200 in the world? Or somebody who says, well, I've got 100 companies. I just hope those ones are going to be the best. So that's the problem. Stuart, please answer that slide stated, don't buy last year's winners, but Microsoft wins for about 20 years and they're still... What I'm saying is you don't just buy it just because it was last year's winner. That's not a hypothesis I've tested. Just buy last year's winner. It's not saying don't buy last year's winner. It's saying don't buy it just because it was last year's winner.